It's Tuesday, the 25th of August 2020. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. AMP's chair steps down and its new head of wealth management is demoted as the group tries to stem the fallout from its sexual harassment scandal. That's our main story. Also coming up in today's podcast, Andrew Forrest's $1.1 billion payday, business groups lose patience with state premiers, and iconic Melbourne sporting events to head interstate. Later in the podcast, I talk to Jeremy Fleming, boss of Stagekings, about one of the most amazing COVID-19 business transformations I've heard about. But first, here's a brief look at markets. The S&P 500 and Nasdaq both hit new record highs overnight. As I've said before, very irrational. Came after the US Food and Drug Administration approved use of blood plasma in COVID-19 patients. The market certainly seems confident about a vaccine. European markets were a little higher. Back home, it was a good day for the S&P ASX 200, which ended up 0.3% to 6,130 points. Fortescue Metals and Afterpay both hit new record highs. More of that in a moment. Not much change in oil or gold prices overnight, and the Aussie dollar is buying 71.6 US cents. The total number of coronavirus cases worldwide is now 23.5 million, with 810,000 deaths. AMP Chairman David Murray has resigned, and the recently appointed funds management boss, Bo Pahari, has been demoted, as the wealth manager finally acted on sexual harassment claims that have plagued the group. Fellow director John Fraser, the former head of Federal Treasury, also stepped down from the board. Now, it follows 2 months of internal and external turmoil at AMP. 3 years ago, Mr. Pahari was docked $500,000 for alleged sexual misconduct against an employee. When he was appointed head of AMP Capital on July 1 this year, it triggered outrage after the allegations were leaked to the media. AMP and its board had remained steadfast in its support of Mr. Pahari until yesterday. Politicians, clients and large investors had called for change, and the weight of public and shareholder opinion forced action. Big shareholders were supportive of Mr. Murray's decision to fall on his sword, though they may not yet be satisfied. Hester Chief Executive Debbie Blakey said the leadership changes do not clear AMP yet, according to the Australian Financial Review. She was quoted in it saying the original unanimous decisions by the board to promote Mr. Pahari and the subsequent handling of the issue revealed serious governance and cultural issues at the highest levels of the company. Mr. Murray, the former boss of Commonwealth Bank, took over as chair of AMP in 2018 amid financial advisory scandals at the group, which in part triggered the Hayne Royal Commission. He's a doyen of the business community, known for his forthright positions on many issues. But in this instance, his judgment didn't pass muster. Whether AMP can recover to once again become a blue-chip Aussie company remains a very open question. In a moment, the rest of the news you need to know this morning. If you're new to Fear and Greed, welcome, and thank you for listening. It's a pretty simple setup. I'll make sure you have the latest business news and an interview every morning by 6:30 a.m, and all you need to do is hit subscribe or follow, depending on the platform you're using. It's the only way to make sure you get it by 6:30 a.m, in time for your commute or morning run. 7 days a week of me, first thing in the morning. What's not to love about that? Overseas news first up. It's the Republican Party's turn to hold their national convention, starting last night, where President Donald Trump was officially nominated for re-election. Mr. Trump will appear on all 4 days of the convention, and 4 other Trumps will be on stage as well. The event will be held virtually, similar to the Democratic National Convention last week. New Zealand has extended its coronavirus lockdown in Auckland for at least another week and introduced mandatory mask wearing on public transport. About 150 people have been diagnosed with COVID-19 during the past 10 days in the country, after more than 3 months of no cases. Hong Kong reported overnight the first confirmed case of reinfection of the coronavirus. It puts in question the theory of herd immunity among populations. Shinzo Abe, Japan's longest-serving Prime Minister, has ended up at hospital for the second time in a week, sparking concerns that he may not be able to continue leading the world's third largest economy. And Bali has pulled back on plans to reopen to international tourism after a surge in COVID-19 infection rates during the past week. Locally, miner Fortescue Metals had a pretty decent 2020 financial year. Just consider this: stronger iron ore prices and record high production levels pushed the group's net profit 49% higher to $4.73 billion. The group paid out a dividend of $1 per share, about 10% higher than expected. Its debt levels have fallen sharply. 5 years ago, the group owed more than $10 billion. Today, it's around $360 million. The group's share price is up 146% over the past year, and management reckon this financial year will be even better. Founder and major shareholder Andrew Forrest will receive $1.1 billion in dividends for his troubles. Fortescue is now the country's sixth biggest company, bigger than Rio Tinto, Wesfarmers, ANZ, Telstra and Woolworths. It wasn't that long ago that the group was an upstart iron ore producer taking on the big boys. Much of its success must be put down to the drive of Mr. Forrest, a strong management team and a bit of luck mining the world's hottest commodity. Premier Daniel Andrews said Victoria's state of emergency could be extended for another 12 months. It would allow the government to continue to make rules on face masks, safe work practices, and crowd density in pubs and clubs. Victoria recorded another 116 new cases of COVID-19 yesterday. There were 2 new cases in New South Wales and 1 in Queensland and 1 in Western Australia. 15 people died, taking the national toll to 517. Meanwhile, Prime Minister Scott Morrison defended the state's efforts to protect aged care residents, saying 92% of aged care facilities were virus-free. And 28 peak business groups, including the Business Council of Australia and AI Group, have written to the National Cabinet saying a transparent and easily understood set of nationally consistent principles on border closures is needed. While there's broad understanding of the need to shut down the Victorian border, there's much frustration around why Western Australia's border with South Australia, for example, remains closed. Companies that have recovered from the economic downturn and not allowed access to JobKeeper come 1 October will need to demonstrate a 10% reduction in turnover to remain eligible for some industrial relations exemptions. The government is hoping to put the legislation before Parliament this week. The exemptions allow employers to reduce workers' hours to 0 and alter their duties without breaching the Fair Work Act. It's the beginning of the process of weaning businesses off government handouts, but there's a long, long way to go. Super Retail Group, which owns Supercheap Auto, Rebel, BCF and Macpac, has benefited from international travel bans, with people holidaying at home, helping push underlying net profit up 1% to $154 million last financial year. The group's online turnover surged and strong sales have continued during July and August. I've spoken a bit about Rio Tinto exploding 46,000-year-old rock shelves in the Yukon Gorge in Western Australia, triggering outrage across all sectors of the community. An internal investigation released yesterday said the destruction of the gorge was the product of several decisions, actions, and information management and communication failings since 2014. Chair of Rio, Simon Thompson, said the chief executive, Jean-Sébastien Jacques, and 2 other senior executives were guilty of acts of omission, but they still remained the best people to run the business. Maybe, but I suspect this report isn't going to placate Indigenous Australians and many shareholders and interest groups. This story ain't over yet. The largest private childcare operator, G8 Education, recorded a $239 million half-year loss, including a goodwill charge of $237 million. Occupancy levels in childcare centres has been hammered during the COVID-19 pandemic. Health insurer NIB said profits fell 40% last financial year, with the group hit hard by tumbling revenue from travel insurance. Shareholders will receive a final fully franked dividend of 4 cents per share, down from 13 cents last year. NIB's share price fell 6%. Reports in The Age and Sydney Morning Herald newspapers this morning that Assistant Federal Treasurer Michael Sukkar used taxpayers' money to fund the employment of a friend to design political smear files and materials and solicit party donations in potential breach of parliamentary rules. Expect more on this one as well. Building products group Boral will drop its dividend for the first time in 31 years, and the group wrote off $1.35 billion in impairments. It expects underlying earnings to be about $800 million last financial year. The challenge for the group is whether to hold on to its poorly performing US operations, and many analysts expect it to undertake a capital raising in coming weeks. Gold miner St Barbara reported an 11% fall in net profit to $128 million. Not good, given the high price of gold. Now, the big problem for the group, which operates several older mines, was on the cost side of the equation. St Barbara's share price rose slightly after the announcement. Buy now, pay later group Afterpay, well, its shares hit another record high after it said it would expand into Spain, buying credit provider Pegantis in a deal worth $82.4 million. The group's share price jumped nearly 5% and is now up 237% over the past year. Pegantis provides buy now, pay later services across Spain, Italy and France. It means Afterpay now has operations in Australia, Britain, the United States and Europe. Australia's second major buy now, pay later group, Zip, reported its best June quarter and has agreed to a debt facility worth $280 million to help it grow in the US. Its share price jumped about 13%. Now, you might not have heard of Media, but you know them. That's the group that owns many of the country's big billboards and bus stop signs. The group made a $27.5 million loss for the 6 months to the end of June, as companies avoided advertising during lockdowns. At the other end of the spectrum, Shaver Shop reported a 200% rise in sales last financial year, as people stuck at home bought clippers, beard trimmers, and hair removal products. Online sales soared at the retailer. I love that story. Now, it's great to see Parliament back in action in Canberra yesterday, complete with face masks and some remote technology in use. I can't understand why, when the rest of the country can work from home, the politicians need to be in Canberra. But perhaps that's a discussion for another day. And finally, the Australian Financial Review is reporting that the AFL Grand Final, the closest thing Australia has to the Super Bowl, will be held in Brisbane this year, away from the MCG, although bids from Western Australia, South Australia and New South Wales are still being considered. The Melbourne Boxing Day test could also be held in Adelaide. Wow. And the Melbourne Cup? Surely not. It's the price of COVID-19. It's easy at the moment to feel a bit overwhelmed by the negativity out there, particularly with so many businesses struggling and the unemployment rate climbing. That's why when we come across a good news story amid the gloom, we want to talk about it. And that's what today's interview is, a ripper of a story about a business hit by COVID-19 that's actually employing more people now than when the pandemic hit. Jeremy Fleming is the Managing Director of Stagekings. Jeremy, thanks for joining Fear and Greed.
Sean, thanks so much for having me.
So what sort of events do you build stages for?
Well, we've done a lot in there. So we started Stagekings 5 years ago now, just over. And in that 5 years, we started off with music festivals predominantly in mind, but it's grown from there. And we do a lot of other things. We've done stuff like the Commonwealth Games opening ceremony was one of our step builds. And Shakespeare's Pop-Up Globe Theatre, which your listeners may have heard, seen around the place. We've done it in 3 states now. And stuff like the Ninja Warrior set, we build the course for that every year. And so some pretty big, large-scale events.
So presumably pre-COVID-19, your business was doing reasonably well.
We were doing really well, and coming out of the end of summer was one of the best summers we've ever had. We had a lot of big events and a lot of multiple things happening on multiple weekends. And so it was going very well.
So how have you managed the last 6 months then?
So Friday the 13th of March, we were down in Melbourne, and that's when the PM did the press conference and announced a public gathering ban on all crowds over 500 people. And that's pretty much everything we do. And we needed to think very quickly of something else to do. We didn't want to just roll over. That was the big thing. We started thinking immediately of anything we could do, like building temporary hospital waiting facilities and COVID testing facilities for shopping centre car parks, and none of that took off. And so a conversation I was having with a colleague in Ireland, a guy who used to work for us that has his own production company now, we made the decision to start making work from home office furniture, and pivoted to doing that. We had the machinery and the staff and these set builders and carpenters, and Mick Jessup, our head of production, is a genius designer and has been designing furniture as a hobby for many years. Came up with some great plans, and we switched very quickly. It was a 48-hour turnaround from idea to being in production.
Firstly, thanks for using the word pivoted. Everyone likes to use that word at the moment, but you really did pivot. So what sort of stuff did you start creating, and are you creating now?
So we started with desks, so work from home desk, and from there it's grown. We've got now over 40 products on the store. And we're really in a dialogue with our followers on social media and asking what people are after. And they come up with a bunch of ideas: cat towers, shoe racks, guitar racks, puzzle boards, all these different things. And we're just about to launch skateboard and surfboard racks as well, ready for Father's Day. So no ideas too crazy.
And this shift you've made, have you been able to retain most of your staff? How have you gone there?
Yeah, so that was always the key for us, was to get going again, get our staff back, but also to give back to the larger events community. So we put the call out to any out-of-work event crew that needed to be working to come and help us sand and deliver and package. And so we've actually more than doubled our crew now, and we've got over 70 new staff on our books. And we're running 24 hours a day. Now,
how hard was it for you, who presumably sold to promoters and entrepreneurs, to suddenly be selling to consumers?
That was a bit of a roller coaster to start with. We'd never done B2C, and to start with, we needed to set up an e-commerce site, which my wife Tabitha did overnight after the idea, and that was by watching YouTube tutorials. So that was the start of it. And then you're right, the customer service element of it. We've learned a lot in a few months. And the thing we've done actually is pull in people to now take care of that. So we've now got actually a Qantas first-class flight attendant who is looking after our customer service. And you can't get anyone better than that.
No, that's true. Going forward, do you think this side of the business is where you're going to grow?
We really can't wait for events to come back, and stagings, we do love to do that. But this new ISO King range that we've made, we've got such a following for that. We're now reaching over 250,000 people a week through social media. So we've got a really big community around that, and we're making things for people every week. So we will keep that going. It's a viable business, and we really enjoy doing it.
This is one of the best interviews I've had, the most inspiring stories I've had on Fear and Greed. So congratulations.
Oh, thanks so much. Love chatting.
That was Jeremy Fleming, Managing Director of Stagekings. There's more to my conversation with Jeremy. The full chat is in our bonus content for today. It's a really inspiring story, and I also talked to Jeremy about the fascinating career he's had so far. He's a really good guy. If you haven't already subscribed or followed Fear and Greed, do it now so you can find my extended interview more easily in your playlist. Now, we've had a stack of 5-star ratings coming through on Apple Podcasts, so thank you. Please keep them rolling in. They help us stand out from the crowd. The other thing that sets us apart is word of mouth. So if you're enjoying the podcast or find yourself telling people about a story you've heard, make sure you tell them where you heard it. We need listeners to advocate on our behalf, in person and online. Your support means we can keep doing this long into the future. More earnings reports today, and Parliament in Canberra should get stuck into some serious business. Holding sitting days is critical in a democracy because it allows both sides of the story to be told. We haven't had much of that recently. It's Tuesday, the 25th of August 2020. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.